Everyone. So the purpose of this video, we did some back testing and stuff like that in previous videos. So now I'm going to teach you about some techniques you can use to trade the markets. So we've talked about liquidity. If you haven't seen that, watch my previous videos. So it's currently Tuesday, the 26th of May, and I turned up at the charts around this time. And I just thought I'd get into a trade because I was very confident that price was going up to this zero level, which if you have a look at my exit, let's have a look. I think you can get it to the tick. I got it to the tick of that, the naught. So this is where you're looking, and now price may break through here, start to trade lower. Okay, promise. Okay, it's trading now below first presented fair value gap of Asia killed him. So again, if you're in your dealing range now, you're looking at targeting low. But again, I've just took my trade on a demo account, admittedly, as I'm just practicing, and I traded Asia yesterday. Took a trade on a live account. I sold off from here, and I took down to this level here, which was, where were we? Here, Asia lows from previous day. So I took a trade at my Apex account, which was first presented fair value gap. Price comes down, comes up. I'm looking at it here, seeing whether we go up or through it. It fails to, as it's like here, so it breaks above slightly at 46, but that's not a macro time. We wait until 50. As you get to 50, price fails to reach up. And again, here, when I'm looking at this candle, I'm thinking, let's enter up into that. This price is struggling to reach through it. And you've got this fair value gap here that I use to get in the trade. And I targeted down to this low, so I got this nice little drop. And again, that wasn't a big liquidity sweep. That's acting as resistance, so that would be very relative lows. Comes up. Again, you're thinking it's going down. I didn't do any more trades, but if I was to do one, it would be a little move down. Okay, but that is adequate enough for me. And you don't want to hold. I didn't want to receive that drawdown and it potentially reversing up back into here and losing profit. So I got that little drop. So this session, I didn't trade this session, but if I had, I would have highlighted down here, which don't know if you can see that very well. You can see it. New week opening gap, displacement. So already took these lows out. So how far can it go before you get a reaction. So it's gone into the displacement, and then we've had that reaction off the displacement. Okay. And it's also beneath this low and this low, relatively equal lows. Retail would look at this. It's support zone. Like that. So it's taken that liquidity. And then you've got up, comes back down, macro time, 4 o'clock. Where would you target? You could target relative equal highs. You did here. As I'm looking at this, I'm looking, there's nothing else below this displacement other than if it wants to go all the way down here, but we're bullish on the day. Got this volume imbalance here, which I've graded, which is caused by the new week. They haven't done a very good job here, but new week opening gap, new day opening gap caused a big volume imbalance. As I said, it's dropping. Because it's taken relative highs. I was just looking at this to just get the target. So when I entered, I saw this measuring gap. But wouldn't you say, Adam, this is chasing price? No. No, because when you know where the drawing liquidity is, and you see price trade through this, so my entry was there, as I see price trading through it, I'm entering on that. Okay. But now look, you're seeing price drop below. See if the bodies of this candle wants to trade up higher into here or stay below. Like looking at the body of that candle, that's the one that's forming right now. I'm seeing what that wants to do. Whether it wants to use this as support, trade a little bit higher, back into this zone, back in between these zones first. So we've got a fair value gap. So how did I know that was terminus 0? Because what I did was I anchored here, 1 up to 0 as the dealing range. But I predicted the dealing range before it happened. Makes sense. So what I did, when price was about here, oh, that's your dealing range. No. I knew the dealing range would reach there because I got my fib. And when you see a gap here, let me just show you a couple of things. So when you have a dealing range, optimal trade entry is between 0.62 and 0.79. So this point here, optimal trade entry. Again, enter entry point as well. Within that dealing range, you could happily enter to target that. But at that point, it's much harder to know that it's going all the way up here. So you'd have most likely had it more like this. I'll tell you why I knew it to go to the 0. So this fair value gap. Optimal trade entry to target these highs. Swept liquidity, remember, in this displacement. Swept this low, into the displacement. So when I turned up the charts around here, like 6 a.m. See if we can get below there. When I turned up the charts at 6 a.m., what I'm trying to spot is where's my measuring gap? Well, I noticed it, so let me just see. Fair value gaps form on quadrant levels. So here we go, let's get these on here. So if I go take the dealing range, and look, got this, I should have had 0.25, it should have had it the other way around, but it's okay. Wow. Wow, wow, wow. Look at this. This proves it's an algorithm. Yeah. Look at every quadrant level on this chart. On the dealing range. Come exit. Proves that I knew where it would be. Because measuring gaps are gaps that fair value gaps aren't traded through, aren't traded to. See how this one here really sticks out to me. Did it work? Just about wicked in, but this clear push up really rarely traded through. This is called measuring gap. So that's 50% of the range. There you go, price coming down, like I said. And what time is it? 6:50. Where are the relative equal lows? Everyone here has made profit, yeah? Could you target midnight price here? Let's wait and see. So yeah, when the price was around here, so if you're looking at the chart like this, all I did was I got the low and I got my fib and I pulled it up, noticed fair value gap 0.75, coincidence, and as it progressed 0.25, fair value gap, fair value gap. So I just got my fib, put the 0.5 level on this. Just like that, dead center. And then I saw that as a measuring gap. And then I was looking at the draw on liquidity, relative equal highs. And I took that trade. So what I'm going to do is just show you how you could have entered here as price breaks through this, trades to the lower. You could have entered here to go down, or as price comes back into this range. Remember, we're in a macro time as well. Again, you could target this 0.5. We've gone from a market maker buy model to a market maker sell model. Doesn't mean it's going to come all the way back down here. But we're looking at some liquidity where it can come to. And again, if you're in this trade, as I said, off that fair value gap, or wicks down into it, price breaks through, your stop loss would have been here. You're at break even already, so there's no risk for me on this trade. So if I was wrong, I'm removing risk early. I don't want to see it break up through this candle. This would be order block now. Last up close candle before a downward sweep. see if it can go into it. Let's see, let's watch, observe what happens. So I almost like predicted this fair value gap. That's why I was confident entering before it passed through. Is I was predicting it would form before it did. It form around the 0.25, around the 0.5, around the 0.75. It tends to be what happens. Look how it the candle just wicked into it and gave up the ghost. Okay, so that could have been another entry. And you're looking at why would that have been an entry? Well, you've come back in, but you've got this volume imbalance there, a little gap. There. Just use that again. Then you've got another volume imbalance here. Another volume imbalance here. Could stab up into that. Let's just watch. So I'm teaching you things like to use volume imbalances as PD arrays when we're going down or up. So like for example, here, stabbed into that volume imbalance. And again, look how it's nicely used, that one. I hope you're learning something with this, because this is really good stuff. I believe that's helped me trade. So I'm looking to get into that. 2 minutes till New York kill zone. So this is the dotted line's midnight price. Let's see if it can. When you're looking at PD arrays, you don't want it to break through 3. If it breaks through 3 PD arrays, then you're struggling. Again, the bodies didn't close below this. It's using this now. The bodies, yeah, the wicks can. The bodies not. Watching this live, by the way, so yeah, you can judge me on my thinking. But again, it's going to use the left side of the curve. Here's a PD array. Overlapping candles. It stopped. Volume imbalance. Going between here to here. If it comes back up, we'll use this level now. This order block as well. Targeting 0.5 relative equal lows. Midnight price. Price wants to reprice back down to that. See how I said it would use that zone. So you can get a bit scared when price is coming up. Again, it's wicked. Let's use this one as well. Same thing. So you don't want to see it break through 3. So if it's using this volume imbalance still. Highlighting all the PD arrays I see. Remember, we got in up here. So we're already in deep profit right now. Working these. Stab up into this one. And if it trades back into this, I'm not a fan. But again, people trapping people into think it's going higher, and look at that reaction. Tried to reach for this volume imbalance, couldn't do it. Tried to reach up into this zone, couldn't do it. It indicates weakness to me. We entered up here. So as the price candles go up, you're getting scared, but again, it's just offering buy opportunities, sell opportunities, sorry. Offering that buy side, couldn't reach up into it. And again, look how it's turned on a dime. No bodies have managed to get into any of these volume imbalances. So let's give it a ghost here. First presented fair value gap, if this doesn't close, so that would be nice to see. So it's forming new PD arrays, which you expect, and it's now disrespecting the ones on the way up as we hit terminus up here. So I traded that for that based on my dealing range theory. It's not mine, it's ICT's. Credit to ICT. He is the GOAT. But I say mine because I use it as well. So yeah, no credit's taken for it. So if you don't believe this is algorithmic, then I don't know what you're looking at, because it clearly is. So first presented fair value gap. And where did I say? Target this below the lows, because I think it's coming here as well, but you can get reaction here before it goes higher. So we'll just target the smooth zone. 30. That finishes. We could draw it like that. Yeah. Me. Just watch together. If you're in the live stream now, you're getting a free signal technically. Let me just correct that. Look how it wicked up. As I noticed where you've got bodies like that overlap, that's a PD array, isn't it, in itself? Is it going to try and stab up into first presented fair value gap? I don't want to see bodies closing above this zone. It's reacted. This volume imbalance. I know. See if it can close below. Get that close. And again, is it trying to trap people in? Watch how it uses the area. Add consequent encroachment. Again, my stop loss would be around here now. So I've already made quite a bit. See if you can push down in the next 10 seconds. You wouldn't be wrong to just use this fair value gap like that as well. I just saw this little gap, little common gap, this PD array, and I've just highlighted it all in one. This price. Yeah, it looks like better if you use it like that, to be honest. I want to see it not react off here and go higher. You want to see this used as an area where it trades through it. See how it started to react off it? Is that indicating the other way now? Depends on how this candle closes. So all you do is look at open, high, low, close, all you need. Again, look how it didn't close above the midpoint. Look at that. It's okay, I'm still okay with this at the moment. Again, people are thinking this is prime buying, but I wouldn't still be confident. I wouldn't be buying that. Unless it disrespects my PD arrays, like 3 of them. So reacted. So admittedly, the moment is reaching up, but you've got order block here as well. So stop loss be here. So now I've closed the bodies here. So now we're looking like this. Looks like you're starting to disrespect my levels. So make sure you lock in profit. Again, the bodies can go up, but let's see if it can trade off. It might reach up into this one, and if we're going lower, you get strong reaction here. Should react higher. If it trades through this, I'm not interested in lower prices really. Again, it's reached before. I'd be out of the trade by now. But yeah, that was a nice little run if you managed to take profit to here. Again, stabbing up. If you were to use the first presented fair value gap rather than this one up here that we got into, well, I'd have took profit somewhere in here, like partial or something. Use this first presented fair value gap, your stop loss would have been above here. So if you were entering now, you're really confident it's going down to this level. Stop loss will be hit. Yeah, you take a little bit of heat. Let's watch it go lower. Again, looking at what we were talking about before. Dealing range, 0.75. Optimal trade entry within the dealing range. But it could have just kept going lower from that. But look how it's reacted off volume imbalance, volume imbalance. Didn't reach this volume imbalance. Confident again that it's coming down to here. Let's see it make a nice push through now. And then use that as an inversion. So it's used this order block. Sometimes when price is really heavy, I want to see it really not trade through that. So it might take a little bit longer now to get down. Just wants to run people out who have made loads of profit all day. Or London. Again, so your entry could have been here. Stop loss above this high. Target here, so look a little bit like this. Short to there. Stop loss to there. Target either there. Yeah. Roughly a 2-to-1. First percentage fair value gap. Then it trades into that, deeper into that premium, into these volume imbalances. You could move stop down to there if you like now. I don't reach 50% of this wick, so this wick, I don't reach midpoint. See? Relative equal lows. Again, I'm not trying to say it's going to go all the way down there. The potential it can react off of this, go up or react at the midnight price, because once you get below midnight, you're at a premium. Again. Just highlighting key areas. Let's use this now. Let's see if we can trade a lot quicker to the target. It's left another fair value gap. Stop loss. Stop loss can be here now. And see if it wants to trade into that. Again, getting the deal, getting the fib retracement. Sorry, I just did that. Start at the high. Zero 0.25. Got to move it up because you want to target when you do that the middle. So could this could be a measuring gap. So like my ultimate goal, if I had to put one on, would be this far down. You've got new week opening gap as well. Again, it becomes less relevant now because it's traded into that. I'd have liked to seen that act as a measuring gap, which it hasn't. Again, I'd just target here. See if the bodies can respect this gap. 5, 3, 2. So it would be a bit slower. Would be a bit slower because we're not seeing it used as sensitively, meaning it's traded to the upper half. Body's still colouring outside the lines with the wick, but the body's still respected it. It's using this inefficiency. See the body stay within here. Again, if your stop loss is there, it's close, still not targeted it. Again, if it's a bit slow, you're now thinking, oh god, it might not be the best session. We've had like a lot of movement. So now I'm starting to think this session's going to be a bit choppy. And there we go, like, you're out of the trade now, really. Ultimately, it is going to go down there. Just again, it's not as sensitive to the PD arrays now. And again, we've inversed the fair value gap now. What time are we on? 7:20. So that was a nice little run. And now we're kind of target is we pick a dealing range from this high. You can always be mindful it can react off say 50% of a dealing range. Let me remove all these indicators. So you're out. I'd be out of the trade by now. But yeah, ultimately coming down is just not as strong. See, be mindful that that was optimal trade entry as well. Yeah. So is it now indicating to me that we want higher? That's why stop loss here. Didn't need to reach for the liquidity. Again, if you got in on the first percentage fair value gap thinking it's going lower, you're protected. You stop loss, made a tiny bit of profit. Now, market structure shifts, I'm looking. Here. It's not showing willingness to get down to the midnight price. But we're not at a macro time, but let's see if we can reach up here. Or he just wants to chop because we've had a lot of movement. How much movement we've had. Just check the news as well. There we are. 26th of May. 3 p.m. Got medium impact news today. Consumer confidence. Central bank, I think that is. Conference board. I don't trade the news as in like, oh, these figures show fundamental, like this fundamentals. No, I'm not. I don't trade them technical analysis on what we've seen today. React off this first percent to fair value gap. Let's see if it trades through this now. I'm just expecting chop. If it reacts here for the rest of the session, if it reacts here, which it's doing, reaching for that inefficiency. So thinking like, what has it reacted off here? What it's doing, it's engineering liquidity perhaps for the next session, stuff like that. If you go to its time frame 5 minutes, this is what you'd be an order block. So it's used as an order block. The last 2 down close candles before the up move, that's what you call an order block. And then we're reaching back up into an inefficiency. So notice how I'd still be in profit, even if my draw on liquidity towards midnight was wrong. It just reacted off the order block. And again, it's took there. So is it indicating it wants higher prices today? We'll see. You have to have predictions, but you can't be too married to them. So I'm thinking, if this happens, then I think this. That's sort of the way I'm approaching the market. If this happens, then this. Again, if it trades through that, then we'd probably just close the laptop. Or at least wait till 8 o'clock. Again, like, if I was targeting that down to there, or down to the, or up to the trade entry, that would be a trade, or down to the order block. You should see like price coming up to here. I like just sitting watching the charts. It's quite relaxing and stuff. Let's just watch it for a minute. Okay, starting to make that move. Notice it's not failing to reach the level. I mean, see if we can get above 50%. It's reacting off it. Again, isn't, like I say, it's being a bit slow. But look, just starting to trade above it. My eyes are here. Didn't trade into this fair value gap at all. Indicates strong bullishness. And the key is to take profits at certain levels. So like, could have took it at order block, could have took it there, even though it didn't reach my ultimate potential draw and liquidity. You're thinking, why didn't I use anchor that low? It's just simpler to anchor. You could use that low as well. It wouldn't be. Let's just eyeball it. It's the same thing. And if it trades through, then I'd definitely not be interested until 8 o'clock at least. But say you did enter up here and you're still in the trade, I'd have took some profit off it at least, if not all of it now. Again, if it comes back down, then we're looking down here. If it trades below here, my eyes are here. If it doesn't trade into this, you basically want to see how it reacts around this level. This is the key element of where the next draw is going to go. Again, can't touch it, so I'm thinking higher. Touches it once there, so that could have been your entry to go up. Just within this bodies here. two little bodies overlapping. You see them touching, so we're disrespecting. How many have we disrespected? One, two, three. There's multiple ones at the signals now. We're going higher. So yeah, this is how I work it and know when to take out my position, even with my biases not 100% correct. And that's what ICT refers to as the cookie cutter approach to trading. Now you go. Starts moving. What then? Relative equal highs. Look at the number. So close to 30,000. Resistance. Resistance. No, it's not true. Resistance doesn't exist. So if you're retail, yes. Yes. I got lucky. I got lucky. Yeah. So potential. But again, like I'm just trying to take pieces of the move. It should be here. Well, that's why you have a stop loss. So now, looking down here, say like, could say like if it traded through this zone, through this candle, your stop loss would be there. So as it trades up, touches it, moves away, stop loss moved up, coming down, taking out this liquidity now. I wouldn't chase this. Getting bullish on the day. So can't predict every single candle, but you can have a rough idea. What I probably could have said is you could have took it at that liquidity rather than that bigger one. Tag midnight, which was my original draw when I entered here, but I would have took profit. So again, notice I was not doing quite so many big runs. So yeah, I think that will do. Failed to reach that, so that does indicate weakness. And again, so if we're looking at lower prices now, where could it go? Does it want to take out London lows? Does it want to start coming towards all these new day opening gap, new week opening gaps on the Tuesday? Smooth. Taking out this high. This low is taken. We've left more relatively equal lows. See if we can stab up. So we want to wait for it to get below that midnight price. See if it could show weakness. High, low, higher high, lower low. Last down close candle. Wicking into it. Let's be mindful this traded to midnight. So if midnight was down here, I'd be way more confident taking that as a sell. But because we've tagged midnight, which was from here down to here, that's the sell. And it's left relative equal highs as well. So it's, for me, I'm not confident in the entry, so I wouldn't enter. Again, it's disrespecting the now here. You have to wait for the price to drop below midnight before I would target these lows here. So price to me isn't showing clear evidence of either direction. So what you do is you just sit on your hands now. And I did say before, if you listen back, if you disrespected this, I probably wouldn't trade the rest of it. At least till 8 o'clock. Because you've got liquidity up here and liquidity down there, so you're thinking, well, you don't really know which one definitely it's going for. You've got this here. I'll just reach down for that midnight price in that gap that I suggested before. So now it's disrespecting that breaker. Let's see if we can take a buy just to showcase something. Target back into that area I had my eyes on before. Body's closed outside the breaker. Tap midnight. Anyone who's late into the run got stopped. Into this little volume imbalance. Reacted off. And again, my win rate isn't winning every single trade, but generally speaking, I'll take something, like I'll at least get break even on my losings and stuff like that. Yeah, this is quite a difficult session, to be honest with you. Not much is happening in the kill zone so far, but it's a lot to do with what we've already had on the markets. So it's disrespected that breaker. Low, high, low, higher, high, lower, low. You expect if price gonna go down, this last down close candle, well, you should have that little one, but I'm using the bigger one. Either way, they've both been disrespected. But even if you had this little one, look how it's used it as an inversion. Relative equal highs with a CB above it. Just practicing with one micro. Get through the first presented fair value gap. Can it react? Here's the green line. Is the average price of the session. So it just tagged it. See if it wants to spin around it. Spin off it. Which it does. That's why I use this. The zones highlights the average price of the sessions, which are really helpful. Again, where my stop's a bit far away now. You don't want it to come all the way back down here. again, it's reacting off that first percentage fair value gap. Again, another opportunity as we've come above it to get in. And again, you're still at a discount relative to the range. So high to the low. Sorry, it's the wrong way around. Optimal trade entry. Whereas I'd take it just above optimal trade entry. Three minutes until macro time. So if we can see like a fair value gap form here, that would be indicating strong. So perhaps fair value gap will form here, perhaps in the macro time. Imagine if that's right, then I've predicted where a fair value gap will form. So now move stop to break even. Give yourself at least 20 points. Well, I didn't give myself 20 points. I should just give myself 20 points, as ICT always says. Give yourself 20 points. Just like, but just in case it tags the order block. Glad I did that. You see, I moved it just in time, to be fair. I've just moved it below the mean threshold, so the midpoint of the order block. I just moved it down just in time. That was smooth, right? Did say I went a bit break even a bit too quickly there. Entered here. Oh, no, we entered higher. No, that was freaking smooth. I moved my stop like, and then the candle just went. But now, like, I didn't want to see this happen. So my stop's gonna get hit in a minute. Just hit 50, so this is where it could start reacting higher because we're in the macro time down the bottom here. And we finally got it. You just got to be confident. Look at that stop placement by me. I mean, to be a bit better, you could have just gone to the low of it. If you say the markets aren't algorithmic, then yeah, so it didn't use this percent of fair value gap too much, to be honest. I wouldn't say this has been a key level. It's mainly because if it had broken this low, then it would have been a better one to use. But let's see. Fair value gap conform. Did I say? Around 50% level. Is that going to be a measuring gap? Lucky still be in this after I moved my stop, to be fair. That's what happens. One thing that happened quite a lot happens to me. I move my stop a bit soon, but you just come down, tag the 0.62 level. So now I'm at break even, which is better because I'm a bit further away from my entry. Just carry on watching it go up. And again, fair value gap being used, not trade down to go quadrant, target here. You might want to take a partial here when you get to there. I'm only on one contract, so I'm just going to let it run, but lock in a bit of profit. So I'm not the most awful trader. I'm not the best trader. Like, I'm getting better, I think. But I'm trying to grow this channel, and my dream would be ICT in the chat. So if I had like multiple contracts on now, I'd look at taking some profit around here, especially if it stabs into that. Can move my stuff up. Because such a big displacement, I can be a bit more aggressive with where my stop's gonna be. Like people, if you highlight this now, look, see that is classic retail pattern. Oh look, we're coming down into trend. Yeah, right. My arse. Coming downwards. Coming down. So I'd expect aggressive movement if we got through when we get through this, or if we get through this. Said you could. That's why you could take potential profit here in case it drops down and then up. But I'm just gonna leave my stop here. Just comes down. See how it reacts to the 50%. See if we can just about get to this. See if we can reach for it. 30 seconds. Let's see if it can tag the 50% or not. If it doesn't, that's good. Shy of it, it looks like it's going to be shy of it. Again, indicates strength. Couldn't reach the midpoint, so discount. Couldn't reach for discount. And again, people here thinking trend line. No, this is liquidity. Liquidity resting, relative equal highs, inefficiency. Here we go. Again, big push through this to up here once it gets through there. Notice how they're single tops. Then we're getting a double top. Again, lower. If lower, this one's lower than that one. So now it's tagged it, or relatively equal highs. Yeah. So I'm looking at every candlestick is telling me the story. We entered down here. I want to see speed if we get above these highs. And no one's in the chat, and I'm just calling out how to trade the stock market. So it's coming to 8 o'clock, so we're still in the macro time. I want to see this still used as an area we don't trade through. Just giving my stock a bit of room, because it has technically swept that liquidity, but it's also swept this liquidity. So if you're looking on smaller time frame, like if you're on, say, the 15-second chart or whatever, you go in liquidity sweep, so it could stab into this liquidity to the 50%. Let's see if it does it. And if it can't do that again, it's showing. So fair value gap's forming. Oh, surprise, surprise. Doesn't allow it. It's just trying to entice people to get in that, you see, to go down. So it's creating more liquidity just before it takes these. You don't need anything more than the candles. And again, 1 micro, we were up. There's a meal. 801. It's very easier doing this than backtesting. I find live streaming what I'm doing a lot more useful, because now we're starting to break through it. It will start to give a bit of speed. Failed to reach the 50% level here, and inside this fair value gap, failed to reach, indicating upwards. What I will do is I will try and see if we can target these highs. So what I like to see, I'm waiting for a candle to close above really. Just using this area here at the moment. Trying to work through that. Fair value gap, stop loss. So if it does break through, I'm gonna move my stop loss below this low. Sorry, the dog's going a bit wild. Oh yeah, just on the computer. So you should see speed, like I said. We're just taking this liquidity out. And again, imagine you've got two micros on here. So I see the close above this candle now. It's what's doing now, you see, is it's people have turned the breakout of this as well. It's another retail pattern, so it's not allowing people to just get that run. They have to time it perfectly, like down here or in the fair value gap, to get that run up. Like if you're trying to just buy here, you can buy, and then you're getting stopped down. And again, it's like it's trapping people who are going for the breakout. Again, you take partial here at the first low hanging fruit objective, especially after seeing that reaction. But I'm gonna hold my stop loss below this candle. To be honest, I can move it to there because if it disrespects this imbalance, this fair value gap, then yeah. So we're taking out minor buy side. See if we can trend. Oh, there you go. Good trade. And that's what you call the cookie cutter approach of ICT. If you're watching that, let me know how you think I did. Yeah, I'd expect here. Notice how the retail patterns fail. You can't predict that's going to be used down to come down here. And we'll just wait, we'll watch it. till the time. Take profit in this liquid in case it doesn't want to reach for the highs. That's why I took profit there. Could perhaps put your stop loss below this low if you want to risk getting all the way up here. But again, I'm not being greedy, I'm just taking the profit where I did. But there'd be nothing wrong with having your stop loss here below this low because you've got that better value gap. Tag the consequent encroachment and see now how it's using it. So if this was inversed, it's not a good sign. Again, that's why I took my profit. And if you see, that's why you take your profit there. I'm on the video thing. 1 sec. Come down in a sec. So, traded from order block back up into that inefficiency. Precision. Look at that. If you had your stop loss there, you'd have just took the loss. But again, if I'd have held the trade, didn't move the stop loss, still in. My mom just bought me an ice cream. How nice is that? That's why I took the profit there, because you could get a reaction and then before it inverts, like it's taken out these. Left me smart money is down here. Again, now it's got back below it, so like you're now thinking, well, there's not much else for this session now. Like you're thinking it's took the liquidity. So where's the next liquidity? If it goes lower, you've got all this down here. So 2 winning trades on demo account, trading with 1 micro. What it's trying to do is trade to midpoint, and it's also wicking people out who just got in here thinking it's going up. So just messing people around. And again, look how the market hunts and stops. Like mine, if I'd have trailed it there and didn't take my exit, it would have just hunted it. Yeah, I'd have been profit, but it would have hunted me. Like I said, I'd rather have seen it not react off here if it's going up to these highs. But now it's come down, taken them orders, it could carry on up. So people who went on the breakout here got smashed. The trendline breakout smashed. Trendline support smashed. My entry was still in, even though we took profit. This is why, like, if once you get more and more confident with experience, I mean, I'm trying to just increase my win rate, so I would have typically held this and then got stopped as well. But that's why trailing stops it's a retail concept. They can be useful, but it is a retail concept, so it's once you start trailing your stop, you're in with the rest, which is the problem. So you have to be very confident it's going to be quick. I'm going to watch this to see where it goes next, and then we'll dip. But like, I still like higher prices. So it's offering at 8.10 discount. Big move's already happened. So from here to here, dealing range, premium, discount, tagged discount, which is the way here. That just whipped into it. Strong reaction. And then again, now it's forcing people into thinking lower. Because it looks like it's going lower. Doesn't mean it is going lower. It just looks like it's going lower. Which is what I want you to think isn't the truth. It's all manipulation. And it's all about trying to be part of the winners. Down here to up here. Or down here to up. If you're confident enough to take that drawdown. I didn't want to take. Why do you stress yourself out to take this drawdown? Knowing full well it potentially could reverse off it. Because there's like draws and liquidity lower as well. Yeah, but again, where jagged prices are, you don't want to trade up into. Look how prices go jagged. You, it, it's protected. Midnight price is offering that discount at midnight, assuming we're going high for the day. Okay, and I've highlighted there as the daily target. Um, so yeah, jaggedness. Admittedly, you haven't got massive news, but there's enough there for me to take on my funded account, my prop firm account. I'd already traded it in Asia. Now on my demo account. Again, we can tag in that again. This is why people say fair value gaps don't work, because notice this was at macro time. So this worked to get up into the liquidity and then failed me, or whoever entered on later on. It's why you're always looking at discount prices. If you can go to there as well, still a discount. Doesn't matter which high you use, it's okay. And again, like, it's just trading it up, and then you can expect, can it come back down at the New York Open? But ultimately, everyone here was thinking downtrend break. So the only people that are really, if it's going to come down, it's coming down to like all the way through and down for the day. I can't imagine it like reacting just off this, because this is where smart money is. I don't want anyone to think I'm a retail trader. I'm using that as target. So it could gyrate around. I'm going to stay on until about 9 o'clock. So whilst it's making its way up, I'm just going to get a quick drink. Um, let's eat my ice cream. What's this? What's this keeps going? It's melted. You don't see people just chilling eating ice creams on live stream, do you? Mm. No, it's had very difficult to get in down here because it moves so quickly. Mm. And like what ICT says, is if you have a low, high, lower, low, this last down close candle is your breaker, take you down. Yeah, we use the verb high gap. Yeah, but if the next low, if the next high after the breaker gets traded through, you can expect price to come up. But notice how like longer it's taken if I had to hold the trade instead. I'm losing all that profit. Like could re-enter like somewhere around in this volume balance, well, overlapping bodies. Take you higher. Here we go. Just chilling, isn't it? Targeting the lower, the highs. Shows me it once. We'll fast forward the video if you want, and then we'll wrap it up. I'm just going to stay on to watch it. And again, once it gets to 9 o'clock, um, it like could take liquidity. Just highlighting the key areas, which is the true support and resistance. So if you found this video helpful and you want to see more live streams, please follow this account because I'm literally showing you how to make money. So yeah, stop loss, break even. The speed of the runs I'm trying to get as well. My original trade, my liquidity draw. Candles come up. They don't want people getting breakouts. They have to move up and down all the time. They don't want to offer too much in one way to anyone. So when it does happen, when you leave fair value gaps. So like where that is now, anchor it. Let's try and line up the fair value gaps together. Let's do it like this. So move some of this stuff off now. It doesn't have to be perfectly lined, but in close proximity. Again, the same here. Fair value gap, fair value gap. Stops at break even, so it could react to these highs and not want to get there. But then I'm safe on the trade. Getting enticing people to go lower. There's no indicators that will teach you this. You have to learn this. Check out ICT's channel, check out all his videos. That's how I learn all of this. I'm showing you what I know in my way of teaching, which is similar to how he does it. But I'm with less experience than him. He's got 30 years of experience. Again, look, it's just a strong reaction between the resistance within a fair value gap here. Stop loss. Let's move it. You'd move your stop loss up. Take a little bit of profit. Reacting inside a volume imbalance and off this one. You want to use both sides of the curve. This acts as inversion. We've traded through to that fair value gap. I'll look at how dead, literally dead stops on that inversion midpoint. Yeah, it's not algorithmic. Yeah, nice one. It's just it just comes across too complicated for people. It's not. It's just practice. And to become a good trader, you're trying to beat everyone else. So you have to practice your craft. It's like a skill. So you've got to try and learn the skill. Um, Otherwise, if you just think a moving average crossover, how many people can just do that? You can code that into an algorithm. Um, yeah, there you go. Tag the minor buy side. Come up to here as well. But yeah, don't be greedy. So yeah, I think that'll do for the video. See if it'll just want to come up as well. Take out these relative equal highs. I can imagine it would. Again, you've just seen me execute 3 trades then in a row. Well, you didn't see this one, but you can see I'm in and I've been sat here for quite a while now, so I'll probably dip in a minute. And the next video, I'm trying to think what's best. I'd like people to comment and join, so I'm probably going to try and focus on getting viewers in other videos. Yeah, this I think was my best video because I showed you how to trade, my way of trading, how I think about the markets, where I look for highs and where I look for lows. Again, like, you have to be mindful that it doesn't always reach to the top one. That's why I took the profit where I did. So I'm going for the low hanging fruit, and you'd expect like speed really through. So if you start to see this like inverse now, that's no good. You want to see that speed up towards it to take that liquidity. Right. See how I took the profit? And if you look, little volume imbalance. Order block. When you're looking at order block, last down close candle for the up move, you look at the wick. So that's the PDA rate within the fair value gap. And then look how it's not algorithmic at all, is it? Just make sure I'm getting the levels completely right. See how it didn't manage to trade to the middle of the wick just yet? See how it reacts. Now it has. So the wick can do the damage, but you don't want to see the bodies really close. Don't want to see the bodies really close. See, there's another volume imbalance here. Reacting on. You don't want to see the body close below here if we're bullish. and then that would be an inversion after tagging the liquidity. But there's still a little bit more liquidity up. Again, it's trying to trap retail traders into thinking about this, but look, relative highs, relative equal highs. And again, you have to consider where we're at in terms of numerics. New numbers, 900. So it's not gonna, a lot of orders will be sitting at 900. It's institutional level, like big round numbers. Again, none of the bodies closing past the midpoint. You wick down into the volume imbalance. We're still bullish. Look at my original entry. Exit. See that? Here to here. So yeah, I think this is remarkable stuff learning. It's like, if there's anything you can learn in the whole entire world, this is what you want to learn. And there it goes. Through the volume imbalance. Okay. Like if you're on 5-second time frame, you probably trade from there down to there as a short if you're really like 5 seconds. I haven't even got the trading view subscription for 5 second. Like you could, like, but this is how ICT probably manages to trade. You probably can do that and that. You probably trade all day long going through the 5-second chart. You don't need to. That's the thing. There you go. Tight. And that will be terminus. That's full on terminus. So terminated there at this high. This was taking low hanging fruit. It's not bad, is it? Okay guys, thanks for watching this video. I'm gonna head off now. Probably make another one later. I'm gonna focus on getting more viewers because if anyone sees this and watches this and you like more videos like this, please subscribe and send me a comment as well. Because I really love teaching people and I don't want to give up, but if I never get any viewers, then it will be the case of me not being bothered making videos. But it does help me learn, but again, I want people to watch this so they learn as well. Okay, thanks for watching and give us a follow.